Time now for another brand new edition of Living Akamai. Today's focus is the rate of return for investment properties. Here's Kemu Kaiga with a special guest.
We're so happy to have Jonathan Skidelsky, Wealth Advisor with Impact Wealth, joining us today. Welcome, John. Tell us a little bit more about Impact Wealth.
First, thank you for having me, Kay. It's a pleasure to be here. Impact Wealth is a local, independent wealth management company started in 2013 by Troy Wada. We have offices on every major island and over 1,500 clients throughout Hawaii and the mainland. We provide holistic and comprehensive financial planning to include implementing tax planning strategies. Since real estate is typically one of our clients' largest assets in their portfolio, we help them with financial and tax planning strategies through the 1031 exchange process into a Delaware Statutory Trust, or DST, which is fractional ownership of institutional quality properties such as student housing, multifamily buildings. As a result, we are the largest DST provider here in Hawaii and one of the largest nationally.
Can you share some reasons why investors choose to sell their rental property and exchange into a DST?
As you know, Kay, the main reason people are just tired of being landlords and managing properties. But what usually gets their attention is poor cash flow that their properties are generating compared to a DST. You know, we often check our stocks, bonds, and mutual funds online, but we rarely ever check, and including myself, we rarely check the performance of their investment properties.
You know, that's so true, and yet it's so important to understand what your investments are really earning. So how would you suggest investors assess their rate of return on their real estate investments?
A common method in the real estate industry is called capitalization rate, or cap rate. However, we use a method called cash-on-cash return, which is the annual return on the actual cash or equity in a property. The difference between the two is that cash-on-cash factors in financing costs, such as your mortgage balance, your principal and interest payments, while cap rate does not. Secondly, cap rate is usually used to value investment property, while cash-on-cash focuses on the cash flow generated.
You know, cash flow is vital for so many. I mean, to understand someone's cash-on-cash return, what are you really looking at?
So you start with the gross rent collected every month. Then you subtract your costs, your expenses, such as maintenance fees, your mortgage principal and interest payments, property management costs, and our favorite, GE taxes. This results in the net monthly rent, which is then divided by the net equity or cash invested in the property. Essentially, we want to know how much monthly cash flow your equity or cash is generating.
You know, over the years, we've seen 2% as the average rate of return on investment property. And this is for those without a mortgage. So it's been difficult for many, especially those that depend on rental income, to pay their monthly bills.
You are correct, Kay. With the high valuation of property in Hawaii, coupled with the high monthly expenses, it is common to see a 2% cash-on-cash return for an investment property in Hawaii with no mortgage. Investment properties with a mortgage usually are lower, and in many cases, we see clients breaking even or even negative with the return. When comparing this with cash-on-cash return with a DST, which is typically about 4 to 5%, I would say their investment is underperforming. With rising costs such as maintenance fees, as we're all aware of, insurance and taxes, I would encourage investors to conduct annual cash-on-cash analysis on their properties. At a minimum, it would allow them to assess the performance of their investment properties and possibly explore better options. These type of conversations are the main reasons our clients have moved from traditional real estate to DSTs.
Well said, and thank you so much for educating us. Jonathan Skidelsky and I have an upcoming seminar that will cover what we spoke about today and much more. If you have any questions for John or would like to attend one of our upcoming events, give us a call at 808-725-2000 or email us at livingakamai.com. Thank you for joining us, and we'll see you next Tuesday. Engel Invokers Honolulu is here to help you live Akamai.
I know Kelly understands this, but if you're like me and you don't understand it entirely, you can always check out one of their seminars, and you can do that by going to their website or go to livingakamai.com.
Yeah, such great resources, and they cover so many different topics, all things real estate, financing as well. So if you're interested, make sure you check them out.